The CFO of Opendoor is departing, the company naming Christy Schwartz as interim CFO, effective at the end of the month. Schwartz has spent more than 8 years as the company's chief accounting officer, also serving as interim CFO in 2022. That was for nearly 2 years. Now, Opendoor, a lot more than the fundamental story. It's the latest meme stock to go crazy in this market. Went from trading below $1 back in mid-July and on Friday settling just under $10 a share. Joining me now to talk all things Opendoor and the state of the meme rally is Luka Kawa. He is the markets editor at Sherwood News. Luke, great to see you. Let's just start with the Opendoor story, and you've been covering this fairly aggressively. I'm curious what you make of the fundamental story at the company right now, which all kind of began with like, hey, it's $1. Hey, maybe it should be 10. Now we're almost at 10, and what the fundamentals are behind that. And maybe we can get into some of the meme stuff later.
So I think it's interesting in terms of the fundamental turn that you've seen in terms of the housing market. You do see some green shoots and things like mortgage applications recently and things of that nature. For Opendoor, a lot of the move or the expected turn in the housing market and housing activity has taken place well ahead of a change in fundamentals. In fact, in its second quarter earnings, it was able to book some positive EBITDA. Revenues came in a little higher than expected, but they did say the third quarter would come in a fair bit worse than analysts at the time had expected. So really the big catalyst for the stock has been the expected change in the fundamentals that the retail crowd very much hopes will happen under this new leadership, which includes a couple of the old co-founders and Shopify's old COO, Kaz Netjatian. So it's really a story much more of the fundamentals that people are willing to dream on, given the opportunities in the housing market, more than it is something that has fundamentally positively turned. If you look at EV to sales ratios, it's pretty much a fair bit ahead of Compass. I think you can argue that arguably Opendoor has more leverage to a positive turn in the housing market than Compass, but this is not a move that has happened yet on fundamentals. It's based a lot on expected improvements in the fundamentals.
Yeah, so let's talk about the expectations and the folks who have them. You had a great story this morning on Sherwood, talking to a number of retail shareholders, individuals who own the stock, and kind of the story they're seeing. And I'm curious, from your perspective, now as a journalist, previously in money management, just the role that these things play within the market and how quickly it feels like you can get a large group behind an idea and they now have enough sway to actually see this thing through. It's just not a silly part of the market anymore. It's a real factor in kind of driving the daily flow and the daily, thought around where are we at, much more broadly than a name like Opendoor.
For instance, Goldman Sachs basket of the stocks that retail traders own the most, it's up over 13% in the past 10 days. It's on a 10-day winning streak for its first time ever. So this is not simply an Opendoor story. But Opendoor, what I think is very unique about it is the extent to which these flows have changed the fundamental picture. I don't think you get Shopify COO jumping back over in the event that you don't get a big increase in the stock price. I don't think you get the co-founders coming back to play a more active role on the board of directors unless you have that interest. So in talking with a lot of the retail investors, one thing that's really, really struck out is transparency, open communication. The fact is that the shareholders that have been aggressively buying Opendoor down when it was at 50 cents, $1, $4, what they've been asking for, they have pretty much completely got. They didn't want the old CEO in. She's since resigned. They wanted Keith Raboy in particular back on the board, one of the co-founders. Mm-hmm. He's come back. They wanted an end to the 10B, kind of the automated selling programs that insiders had. Those have been taken out. So now it's like you have convinced and you have acted upon the wishes of the people who had the most passion and who were in at the ground floor. You've won them over, and they've been showing that they're willing to buy more on these positive catalysts. Now the question is, you still have to convince the rest of the world, and you have to do that both through putting it up quarter after quarter and by kind of showing some more headway in taking on what I would call, the three spreads that Opendoor has to kind of attack. That's the spread between what they're going to buy homes at, what they're going to sell homes at, the spread of what they're effectively getting by trying to cut agents out of the equation, capturing that spread.
Yep.
And if they move kind of more into the mortgage financing space, well, that's the spread between what they're lending and what they're borrowing at.
And moving maybe a little bit away just from Opendoor specifically, I'm curious what you make of the meme stock, that presence in the market today. I mean, you mentioned Goldman Sachs has a basket that tracks it. It seems to me it's just a more serious part of the conversation, and that these things do stand for something other than, like a lark. Like, it's not, there's a lot of real money that is chasing these ideas, whether it is the playbook that Eric Jackson is running, or just this notion that you can get enough capital behind enough ideas around certain stories that you can create a real trade out of it. What do you make of the meme rally, the meme presence in the market? It just doesn't feel like it's going away. And how much of a sentiment barometer, let's say, sentiment barometer is it that you look at when you're thinking about markets on a day-to-day, week-to-week basis?
So I see really two things at play here. First is that I would emphasize, when you think retail investor, you think someone perhaps with a limited net worth sitting behind or like making a trade or two in their brokerage account. Pretty much all of the folks I talk to who are very actively involved in Opendoor, they are accredited investors by any other name. If they wanted to flip the switch, they qualify based on net worth, based on income. So these are real people with a lot of money. So I think that's one thing first that we should perhaps probably re-clarify how we think about retail investors, when a lot of this is really kind of more akin to high net worth investors moving markets. So that's a starter. The second, I think you really, really cannot overplay enough the role of weekly options in the market in terms of being able to influence, drive, and precipitate bigger moves in stocks. So, for instance, a lot of the folks I talk to, they straight own the stock. They like the stock. But when the stock is getting a positive catalyst and it's going up, what you are really also seeing is, in addition to active buying of just the underlying stock, you see very, very aggressive buying of near and out of the money call options with an expiry at the end of that Friday. That has in itself a kind of positive reinforcement effect in terms of what it creates in terms of demand for the stock. So what I see in this is, like, yes, we now know by virtue of market structure that there are ways to have very strong, nearly self-sustaining moves up to a point. You kind of need more volumes and more interest to keep it going, absent positive turns in the fundamentals. But we know that this happens. I know that market makers are certainly aware of it in terms of how spreads have changed, even since the initial kind of GameStop 2021 episode there. So it's a feature of markets. And for me, it tells me that people are a lot more active in the stock market, and they're using it not only to kind of bet on turnaround stories through just owning the stock, they're also using it as a speculative device in terms of short-term gains, and that is pursued aggressively in the options market.
All right, we'll go really, really deep on market structure next time. Luke, appreciate the time. Have a great weekend.
Always a pleasure.